Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. So make it a great night, folks. Market-wise, let's take a look at it out here. The Dow Industrial's up 2, Nasdaq's up 12, S&Ps are up 6, gold contract up $4.30, traded $1,234 an ounce. Silver up 6 cents at $17.40 an ounce. Platinum up 6 at $1,269 an ounce. Copper up 4 pennies at $3.08 a pound. Light sweet crude, check this out, folks. Light sweet crude is down $3.91 at $81.83 a barrel with volume. Big juice on the way down. Bonds, the ever-ready bond market. You got the 10-year up 9 ticks at 127.14 with conviction. 30-year up 21 at 142.22 with conviction. You're going to see rates get lower. Bond prices higher. King dollar up 213 ticks, trading out at 85.94. You got the euro down 104 ticks at 126.48, and the yen is trading flat at 106.92. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Price, folks, is really hard to hold out here. It's pretty amazing watching this whole baby shake out. So what do you have? Well, first off, folks, what we have is this. You have an A to B structure of a very large ABC structure on the way down. It is a monster. Your A point is 2019, and your B point thus far is 1874. So we're talking almost 150-point A to B structure, S&P, monster. Now, with that setting up, that's setting up the next leg down, and that next leg down is going to bring us into the February 5th benchmark. That February 5th benchmark that we've been talking about, the low of that is 1737. So the setup is there right now. The real question inside the markets right now, are the markets going to be able to bounce? I suspect what you're going to see is this. What you have out here today is that if we take a look at the SPY right now is trading at 187.71. We got to 187.51. We have done 157 million today. Yesterday did 230. Now, yesterday, the amount of selling yesterday is pretty amazing, that being a holiday. So, in the context that a bounce coming, I suspect we're going to probably get one. Because if we don't get a bounce, let me tell you something, it is going to be a total mind blower, because what you'll actually get is that you will get the run down to, let's see, on the S&P, the run would be, this would set up an A to B point that would be extraordinary. So we're at 1881. You can get the run down to 1815. And if that was the case, then you would have a 200-point A to B. Now, I've seen 200-point A to Bs before, but you don't even want to hear it, because when we had a 200-point A to B, that was in the 2007, 2008 area. That's one of the largest ones I've ever seen. Yeah, so we'll see where this shakes out. Realistically, I suspect you're going to get a bounce out of here, though. It looks like you're not, but that's how the markets work. Why? Because the amount of energy that's going into these lows out here today just is not enough. You know, you can see that we can't hold price, but what you're actually doing now is that you're coming into lows, and then you have lighter volume coming into lows. We go to the Dow Industrials. We take a look at the Dow. Put your stops in, folks. If you long and strong, put stops in. I know, each and every time for the last 3 years, whatever, every bounce works. Bottom line is that, you know what? Put stops in, because this is a disaster, number one, but I suspect it's going to get a lot worse. Dow Industrials are up 16 bucks. You're at 16,336. That swing low that it got into was the 16,332. NASDAQ Composite. We take a look at the composite. What you have inside the composite is up $14. Actually, a sideways market, and it's actually pushing into the lows of yesterday. Yesterday, you had a low of 4212. We hit 4212 today. The volume out here today will run in the NASDAQ. That big volume again. We're at 1.9 right now, so the NASDAQ will run about 2.3, 2.4. We look at the NDX 100, the 3 Qs. What you have with the 3 Qs, That is breaking a low. And inside the 3 Qs, by the way. So check this out. This is pretty intense. So the 3 Qs yesterday, 92.86 was the low. We're at 92.98. You have 56 million. So the volume is dying a little on the Qs. But inside the Qs, now this is a heads up beyond belief. Apple, folks, hasn't even broken apart yet. Okay, what you do have today is that your Gilead is breaking. You know, that's down $5. You have Autodesk down $1.95. Expedia's off $1.88. Mylan Pharmaceuticals off $76. But if we go over to Apple and take a look at Apple, Apple is basically almost ready to croak. Apple has not been able to get any traction whatsoever, even when we went up 200-300 points. Apple was starting out today. It was really intriguing watching this baby shake out. So Apple's down 79 points since today. Not that that's a huge amount. It is not a huge amount. What it is, though, is that you have that swing low out there at 96.14 that it's trying to go after. That was the high volume day that we had on the 9th of September. Gold contract. We take a look at gold, what you have, and you're going to see divergence out here. And the divergence is really sweet inside the gold market, and this is what it is. Gold right now, it's subtle. It's only up $3.60. What you have behind it, though, is you get some nice juice. We're at 104,000 contracts. It's hanging at a high, and I expect what you're going to see in the next few days, gold's going to try to make its way back inside the 1242 area. The 1242 area, that's what it has to get back inside in order to get into higher price. Now, silver is a different animal. Silver has a lot more work to do. We take a look at silver, SIZ4. Silver has a good $1.30 to get back inside. It doesn't mean it won't do it, but silver's trading out at 1740. That's 1870. So that's a long way. I suspect we're going to have to build some more cars inside the silver in order to get up into that area. Oil. This is the ultimate, folks, that all you folks in the Northeast, out in the Midwest, anyone that's going to be using heating oil this year, you're going to save a lot of money, big time. So we're at 81.90. We've done 437,000 contracts. This is a monster, folks, okay? So if I put this on a continuous contract and we take a look at where we are, I'm going to put this back. Okay, so we're at 81, and we're on our way right now to 77. This is, once we broke inside 85, your swing point that goes back to 2012 is 87. 77. 77! So check this out. This is where this is going to get really intriguing, and this is what it is. At $77, yeah, we break $77, and you're going to see 60 to 64. It's hard to believe. Yeah. I mean, that's the way this is set up right now. So it's a big number, and there's not enough doors to get out of that market. That is the actual crude oil. We get into the heating oil. So crude is down 4.5% today. Heating's all down 3.3%. Let's talk about gasoline, because when we're talking gasoline, it's going to affect each and every one of us every single day. And what we have with gasoline is gasoline, unleaded gasoline, folks, is going to be trading. There she is. Oh, come on, baby. Get up there. Gasoline. There she is. Come on. If I don't hit this quick enough, it disappears on me. Look at that. CRB. So we're 217 wholesale. It's down 7.5 pennies. Oh, this is pretty. Okay, XB1. Let me do this one. Gas is going to get cheap for us, folks. Going to save lots and lots of money. Okay, so I'm going to put gasoline back on 3 years first. Ooh, this is pretty. Ooh. Put it on a, look at this. Gas is going to, wow. So your next stop is 182. We're 217. And we very well could get down to, okay, so 211. Right now, 211. You get 6 more pennies. You crack into 211, though, guess what? We're going to have 144. Big, big numbers on the way down. We're going to be saving lots of money, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during the shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Earl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 26. NASDAQ is up 3. S&Ps are down, well, NASDAQ is, where is it? NASDAQ's up 4. S&Ps are up 1.75. Bottom line is that this market's having a tough time holding price, period. And what you will see, if we go look at Johnson & Johnson, these numbers, Johnson & Johnson come out with numbers out here today. Bottom line is that the numbers were good. And so this is one of these deals that, you had the numbers good, and they just smoked this equity. It's down 232 right now. Monster volume, 16 million. This is when you can see, folks, that what you have is that You have operators getting out of equities fast and furious. Johnson & Johnson itself had gone all the way up from the 67 area with no volume. That's what we're going back to, 67. It looks like what we're going to have here is that on many of these equities, because of the way that we launched higher from June of 2012, they're coming back with a vengeance. And more than likely what that is going to set up, which is really going to be a trip, and this is very large heads of Head and Shoulders in their tops. They're not bottom. So that is setting up basically a tough market for quite a while. And I say quite a while, you're talking about whether it's a year, year and a half, or whatever. Now, what does happen with Head and Shoulders is that Head and Shoulders, speculating on them, they're always all over the place. So that's just an observation at this particular point, the way that they're kind of set up. Because when you look at the market, you can always look at that. There's Head and Shoulders bottoms and tops, you know. But we'll see where it sets up. What we absolutely have now is that we have a market that is going south with huge expansions of volume that cannot hold price. And, you know, if we go over to the IBB, now the IBB hasn't even fallen apart yet. You know, it's down $2 today, big deal. What you have, though, and this is where it's getting really subtle here, even when prices come down slightly, like the IBB today, it's a $255 index, it's only down 2. You're getting an expansion of volume. So what's happening there is that the large operators are basically, I'm sure they're laying on their knees praying, saying, I can't believe they're letting me out of this indice and I can get a decent price. Because the expansion of volume is basically saying that. If you go to Gilead, Gilead's down 531. And if you want to see how they come into lows, test the lows with volume, see what they can hold. Gilead on the 5th of September had traded from $106 to $97, monster volume, 36 million shares. Now check this out. So you get down to $97. You get 36 million shares. It makes its way all the way back up to 110. So what are we talking? You're talking about 18, 19 points all the way back up, which is amazing. Guess what? You're right back there. You're down there with volume again. And the way that this is set up right now, let me put this on a 3-year. The way that Gilead is set up right now, it wants to run down to $73. You know, so there's big numbers on the way down, and because we went up so substantially without stopping on the way up, that is problematic on the way down. Wells Fargo. Now, okay, so let's go to Wells Fargo. Now, WFC. Wells Fargo come out with the numbers out here today. Numbers were good. Bottom line, they made their numbers. Estimate was $1.02. They made $1.02. Wells Fargo's down $1.80. Also monster volume. If you remember 2008, when the financials fall apart, that's the end of the deal, folks. So if we take a look at the Wells Fargo on a longer-term basis, it's not the worst-looking stock in the world. I suspect so at 48, 44 is the next level on the way down. We'll see how it attacks the 44 level. If we go and take a look at the XLF, what you do have with the XLF, that's flat out here today. We're 22.41. That, however, has an expansion of volume. That little baby is building cause to get into the $22 area. Some of the Dow stocks out here today, what we have, Big Blue up 55 cents. Big Mac is up 31. You get JP Morgan off 52, off 53. Let's go over and take a look at JPM. That come out with numbers also. JP Morgan, sideways day. You're down 53. Expansion of volume. When you see that, JP Morgan's going to trade a lot lower. JP Morgan has been at the same place now since going all the way back to May of 2013. We're 57.62. And the way this little baby is set up, once it gets back inside 53.25, then JP Morgan has have some big problems. You know, we had broken out of that 2007 area, did it with lighter volume. You break back inside of that area, and what that sets up is a lot lower price. We go take a look at the DAX. No, let's go to the FTSE in London first and the UK. FTSE in London today up 26 bucks. We're at 63.92. And put this on a couple years. Okay, so yeah, we're going to get a bounce out here. You know, the market, no doubt, is weak in a huge way, folks. And I wouldn't be playing the bounce either. Right? If you're long, I'd be putting in stops. If you're a bear, the counter trends right now, I wouldn't be going long. In some markets, you can go long, folks, but all the surprises are going to go to the downside here. So what you'd wait for, you wait for a nice bounce, and you basically pull the trigger and go short again. The FTSE right now, I mean, the DAX, yeah, the FTSE 100 basically is saying that, guess what, it wants to do a bounce. That level there, and this is where you'll get a nice setup, is that the 14th, that can't be today's trade. Yeah. Meaning the volume doesn't look right to me here. But bottom line is that price-wise, it looks like it wants to bounce. We go to the DAX in Germany. We take a look at the DAX in Germany, what we have in Germany. Germany was up by 12 bucks today. And we bring this back. And that's a mess, too. But the DAX in Germany is already back to October of 2013, so a year later. So what you have there is that the DAX is at 88.25. You know, we'll see whether she can bounce. The FTSE looks like a better bounce than the DAX at this particular point. Inside the Tesla, TSLA, let's go see what a couple of these high flies are doing. You know, Tesla is at 226. That's down from its high of 291. And that also is going to be coming into 178. So these equities, some of these equities are just going to get pushed lower in an extraordinary way, not in a small way, folks. Okay, it's pretty amazing, actually. It is amazing, and it isn't. That's what this really comes down to, because what you do have, the small caps, no doubt, led this baby down. The Nasdaq basically has taken over to a certain point. If we look at the IWM, you're 105.28. We put this back. This is, of course, the small caps. The small caps right now are trading where they were trading in August of 2013, and what the small caps have done, they're already set up to run down to this 87 area. So, well, actually, the first stop would be 89. And 89, of course, is another 11 bucks down from where we are. This is Tom O'Brien. This is TFNN. Don't go short them right now, folks. You got to wait for a bounce out here. You get the Dow Industrials right now down 7. Nasdaq is up 13. S&Ps are up 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom
optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials right now down 30. NASDAQ is up 7. S&Ps are up 3.5. Let's go to Mike in Toronto. Hey, Mike, what's going on? You there, Mike?
Thanks for taking my call.
Sure. Well,
I want to take a look at a couple stocks. The first one is Knightsbridge, ticker symbol VLCCF.
So let's take a look. You get a Knightsbridge Shipping, international shipping company specialized in dry bulk cargoes. The low is today, 625. The high is 1632.
Okay.
So we take a look at this. We'll put this back. And,
on the monthly.
And you're coming into the low of 494 with monster volume, and this is in trouble, man.
Yeah. Is it signaling bankruptcy?
Most of these, let me just see something here. 1 second.
Would I have to look at insider selling?
No.
As a clue?
No. So what you have here is this. You go back. So your low, there it is right there. So your low is 547. You know, you break 547 with this type of volume, yeah, then you're out of business, period. I'll show you something that looks like it's going to go out of business. I was doing the gold report today, folks, okay? And the Anglo Gold, now this is going to be sad if this is the case, because it's going to be a lot of money lost on this. Anglo Gold is at 1087. The low going all the way back, I'll bring this back 25 years, okay? It has broken every low that is out here. And if that's going to be, and we're talking monster volume, so what you have, which is really intriguing in this one, is that this is Paulson, who's one of the largest owners of it. Now, you know, he owns 26 million shares, or 6.5% of it, and then First Eagle Investment owns 7.8% of it. Now, the reason that this is one is it's, when I was doing this, I'm looking at myself, man, this is intriguing. Now, I know the company. This company here, folks, was put together by two companies that had already gone BK, and it was Ashanti. Ashanti was one of the largest bankruptcies ever inside the gold market, and that goes back about 17 years ago. But this thing here is signaling that it's in trouble. So that's the reason I just brought it up is that you can that's what an equity looks like when that is happening. If you want
to have heavy insider selling.
No.
Mm-hmm. Okay. How about Valero? VLO.
Valero. We take a look at Valero. Valero, folks, is the large independent refiner. The low is $35. The high, this for the year, is $59. And if we take a look at this baby, we put this on. This is making its way back to. This is just a classic bounce, meaning that when it bounced from $16 to $60. So this one here, this should get some support, like around $41. We're at $44.94 right now. So see how it hits 44. 41.
Okay, thank you very much.
Okay, man. Have a great one. Have a safe one. As one of our tigers is saying in the den, KGC. Ken Ross Gold is in tough shape. And if you want to see KGC, folks, so this is how this works, okay? And depending on how long you've been listening, 289 is the low. The high is 544. And this is going to be, this one here is going to be an absolute classic. In fact, I got to get the guy that was the CEO of Ken Ross back on when he pulled out. The reason being is that I had done an interview with Bob Buckham, and Bob was the CEO of Ken Ross at one point. And when Putin had taken over, if you remember, this goes way back too. When Putin had taken over, he changed all the governors inside all the different states inside, Russia. And what had happened is that KGC, Ken Ross Gold, and Buckham had put a huge amount of money. I think at that point it was either $23 million or $30 million into a mine. And the governors had decided they were going to change the context of how it was going to be divided up. And he told the story over the air. It was an amazing story. And he had said that what ended up happening is that they went to the meeting, and as they always do at the meetings out there, he said, you start with a bottle of vodka, 8 o'clock in the morning. They're drinking, doing the deal, and then all of a sudden they say to him, listen, you have to come up with this much money. We're going to do this, we're going to do that. The bottom line is that they never thought he pulled out. He pulled out of Russia. What ended up, I don't know what ended up happening inside the company, but then he wasn't the CEO any longer about a year later. Bottom line, Ken Ross was trading like at $25 or $30 at that point. It's at $2.95. What Ken Ross ended up doing, which is insane, is that they doubled down. They ended up still doing business there. By the way, the mine that they actually have there is still, I don't believe it's producing yet. Then what they end up doing is that, and we made a really good buck on this, because then they end up buying BGO. And BGO is also doing business in Russia. Bottom line is that huge mistake, huge political mistake. And as soon as I had heard that story from Buckham, we basically, I got a great heads up about Russia in general, Putin in general. But this equity here also is on its way to $1.32. You break $1.32 and they're out of business. My take on that one was that the difference in the gold and metal business versus the energy business is that the energy business, folks, you can get a well up and going in about 90 days. If you know where oil is, you get down, you get it, boom, you can get it out. So stealing the oil is a lot harder, but you can see that, you know, Putin stole plenty of oil from private enterprise and just basically gave the bureaucracy the oil. What I always figured inside the metal market is that it takes so long to build these mines that they would let them build the mine first, then take everything. And that's what might be happening here. The bottom line is that don't touch KGC and or anything else that is over there. What I did start doing last night, so check this out. I got to do this right now because in that context, last night I start looking, I says, okay, so there's no doubt that the Russian market has been getting smoked. And the ruble has been getting smoked. So I was like, okay, and there's plenty of ETF structures inside the U.S. that you can trade it. But when I looked at it, I says, you know, it's still, you know, you read the amount that it's got smoked. And if you're watching Tiger TV right now, I'll bring it up. And it's still not ready for buy, though. We're at 1522. And, you know, it's like, okay, it's going to go after 1431, and we'll see whether it, you know, basically holds that level at the 1431. If it doesn't hold the 1431, then it's really got some troubles. Then, you know, then the 2008 low is 819. Doesn't mean it's going to get down there, because what you have in that market right now is that as you are coming in, the volume is starting to contract as you're getting into those lower levels. If we go over, take a look at the, let's go look at the silver market, because here, I want to show you something. I think it's silver wheaten when I was doing this. Yeah, okay, so if we look at silver wheaten stays up 53 cents. Now, for all you silver bulls out here, this is kind of cool. And what it is this. Silver wheaten, okay, is the largest silver broker in the world, probably. This thing came down hard. We've come down from $27. You're at $19.85. It had a beautiful sign of strength last Wednesday. Thursday had also a sign of strength. You want to keep your eye on this, because it only has to get back inside 20.03. And we hit 20.25 today, but we just didn't have enough juice. If we see that get inside that, what you're going to want to look at is the silver market in general. Okay? So this one's going to be really intriguing. I didn't bite on this today, you know, but the way that it's really set up right now, it looks to me like, number one, it's made its bottom, and it's trying to get off its bottom. You know, if we get off that bottom, if you like the silver market, be all over it, because the way silver wheaten is set up is that it looks like it wants to go to the top of its range, and the top of that range is a lot higher than we are right now. So out of the silver equities that I was looking at today, silver wheaten actually looks like about the best one as to gauge where that metals market that wants to go. Commodities in general out here, it was the whole crude oil section that got absolutely smoked. Crude down 4.4%, heating oil at 3.4%, gasoline the 3.3%, natural gas 2.2%. On the way up, you had corn, soybeans, coffee, all of the above on the way up. So the volatility is here in spades. There's no doubt about that. What you can expect, this King Dollar, folks, King Dollar now is doing an ABC structure on the way down. It's going to be a beauty. What it's going to do is going to give the metals market room to breathe. King Dollar right now is 85.95. I expect we're going to get down to about 83.99. 83.70, somewhere around there. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow up 15, NASDAQ up 20, S&P's up 8.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can do each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dow Industrials right now up 24, Nasdaq up 21, S&Ps are up 9.5, and you can continue to expect this type of volatility in the market, folks. When you get large changes of trend, that's exactly the type of trading that we get. And what's going to be intriguing here is that so that's on the S&P, the Dow, the NASDAQ. When you do look at the gold market, it's the same type of volatility. The difference that I feel is that the gold market has come off the bottom, but that volatility is going to be here for a while. The reason being is that it's a very large, different change of trend, meaning going from down to up. S&P is going from up to down. It throws volatility into the market all over the place. What we will have after the close out here, we got a couple. Intel's going to be coming out with numbers. Intel right now is at 32.12, and if we take a look at it, what you do have with Intel is that you have a gap that's open underneath it at $27.27. You get that high volume pop on the way down at 30.50. So that your probability is that, guess what? You're going to go basically go after 30.50. More than likely, you're going to go fill that gap at 27. And if that's the case, you're going to see the NASDAQ basically get smoked. So this is going to be really intriguing because this is a tough one in the context that when you take a look at the weekly, the week of the 18th of July, you go topside, have volume, get to 34.74, do 330 million shares. But then you topped out with 115 million. Then you come back downtown. As you come back downtown, you come back downtown with 194 million. What that sets up is at least a test of the low of 30.50. So we'll find out quick enough. And of course, when you do have earnings into the marketplace, it makes it dynamic, particularly when we're talking about big numbers. The Intels of the world, basically Amazons, the Googles, all of the above. And as we talk Amazon, let's go over and take a look at Amazon right now. Amazon is building cause for lower price. We're at 309. That's building cause to get into this 294 level. Inside the NDX 100, what was putting juice into it today was you got NXPI. Now, this is important to understand. That's strictly a dead cat bounce. It's up 296. You're trading at 56.86. This equity is down from $75. It went straight down. $73.70. Didn't see any light of day. Goes down to 53. That's setting up a much larger ABC structure on the way down. So when you're bisecting and dissecting equities, folks, what you want to do is you'll take, the strongest ones in a day like today and say, okay, what are they doing? Are they dead cat bounces? Are they stocks that are going to new highs? And you can glean a huge amount out of that as to where the indice itself is going. As we had said, the Russell 2000 is and has been leading the market down. What we will see, let's see. Yeah, most people are getting their statements now. They've already got their statements from last month. What will be a shocker for many folks getting their statements is that, you get the Russell 2000, 3000, I think there's a Russell 5000 too. The bottom line, out of Russell 3000, folks, you have 3/4 of the stocks. 3/4 of the stocks, okay, in the Russell 3000 are down over 10%. So it's a big number that many folks more than likely have inside their portfolios that will say, hey, I thought we were at highs. Well, we get to lows, and you get to lows pretty quickly. One of the targets wants to take a look at the UNG. The UNG is the U.S. Natural Gas Fund. That's down 45 cents. And this little baby, you got 11 million shares. You're breaking the low at 20.45 with volume. And that sets up an 18 UNG. Let me pull this back and take a look at this. I think it'll be easier taking a look at the actual natural gas contract. So natural gas right now is at 383. Today we've done 114,000 contracts. So the way that natural gas is set up, it hasn't broken its lows. This is the future contract. 381's the low. And the volume today basically is not that bad. It's not heavy. At this particular point, let me go back to UNG again, because the UNG looks to me like it wants to go a lot lower. And we pull this back. I got it. This is one of these. Okay, so the UNG 20.52. Yesterday we did 40 million. Today's only 11. It's not bad. I wouldn't be long it. That's the bottom line. There's not enough identification in this that it wants to go higher, you know. And once you break under 2073, which we're at 2053, that thing can go down to 1780 in a heartbeat, you know. So what you're going to see out here, the energy complex itself, and more than likely this is probably what's pulling natural gas down also. Oil's going a lot lower, not a small amount lower. The way we broke down today, first you had the ABC structure down to 80, 85 rather. Then it was 80 because it did a bounce. The way oil is trading out here today, it's $77. That's where oil's going. You know, the structure on oil is pretty clean. CL1. I'll bring oil back up again. You can see and that's going to be, I know that's amazing. There's no doubt about it. When you take a look at CL1, yeah. So you're at 448,000 contracts out here today. You put this on a monthly basis. It's like you're, $75, man. $75 is wide open, and then 64 is wide open. You know, it's breaking down in an extraordinary way. Right now, oil is trading where it was trading in January of 2010. And when you get out and it's this fast and this furious and you're breaking levels, there's nothing to stop oil from at least 75. You know, they'll fight like dogs and cats at 75. You know, and we'll see whether it will save enough at 75. What you have to remember is that the airlines are doing a dead cat bounce. You know, it's amazing. The headlines, if you want to see something that's real wild about headlines versus what's happening, the headlines are saying, let's see, that, I just read this. This was hilarious. It was like really sick. That, you know, oil, I mean, the airlines are going up 5% today because oil is down and no one's worried about Ebola. Folks, the airlines are doing a dead cat bounce. They're on a monster ABC structure on the way down. Delta Airlines today is up $1.85, 26 million shares. You came down yesterday and broke down 48 million shares. You know, Delta's in a monster ABC down. They all are. The bottom line is that, you know, Delta's at 32. That thing wants to trade to 23. These are dead cat bounces. You stay right there, folks. It's Tom O'Brien. This is TFNN. We're going to be coming right back. And, of course, today's Tuesday. So on Tuesday, we got our man, Mr. Andy Hecht. We're going to be talking on my show from the 4 to 5 level. He comes on, does a full show, 5 to 6, all about commodities. This is Tom O'Brien. It's TFNN. You stay right there, folks. We'll come right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. Market-wise, let's take a look at it out here. We had the Dow down 5, NASDAQ up 13, S&P's up 9.5. Gold contract up $3.30, traded at $1,233 an ounce. Silver up 3 cents at $17.38 an ounce. Platinum up $2.65 at $1,265 an ounce. Copper up 3.5 pennies at $3.07 a pound. Light sweet crude got absolutely smacked, folks. Down $3.90 at $81.87 a barrel. That baby looks like it's going to go to $77. Pretty amazing. Bonds. You had the 10-year up 10 ticks at 127.15 with volume. 30-year up 23 ticks at 142.24 with volume. Both those want a lot higher price. What we have is that the yield on the 10-year right now is at 2.199. Pretty amazing. King dollar up 188 ticks, trading out at 85.91. The euro's down 94 at 126.58, and the yen is trading at 107.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Cash S&P, 1871 was the low. We're at 1881. Volume-wise out here, what we did is this. We did volume of there she is. Volume-wise, we did 972 million shares versus 905. Bottom line is that you're coming into lows. You have big volume coming into those lows. This market is having a hard time getting any type of bounce going. We take a look at the SPY, the SPY. We did 207 million shares yesterday, which was a half a holiday. You did 230 million shares. What I expect you are going to see out of this, though, well, this is a much larger ABC structure on the way down. If we go take a look at the SPX, number one, what we have in the SPX, we're at 1879, and this little baby wants to get into that February 5th benchmark of 1737. So it's a monster ABC structure on the way down. What I do expect you're going to see somehow, some ways that we're going to bounce out of here. Dow Industrials. We take a look at the Dow. What you have with the Dow. Dow Industrials, flat market, down $5. The Dow is at 16,313. Somehow she's going to bounce. And the bounce in the Dow, by the way, can really get you up to about 16,600, like a 300-point bounce. That's just going to be a much larger ABC structure on the way down that will take you down to the 16,000 level. NASDAQ Composite. Inside the Composite, same setup in the Composite, monster volume in the Composite out here. The Composite, it says it's up 13 points, which it is. Yeah, that's an inside day, however. And volume-wise out here, we did 2.4 versus 2.4 billion. This also is going to do some kind of a bounce. The bounce in the Composite can probably get you up to about 43.35, which is a decent bounce. That's like $115. None of the equities thus far have been able to hold price. I expect somehow, some way they're going to, but we'll see where that shakes out. Gold contract. What we have with gold is this. Gold is building cars to get inside the 1242 area. 1241.70 to be exact. I do expect you're going to see that, and I expect you're actually going to see that in the next week. The setup is pretty good. There's divergence in between the gold futures contract and the GLD. The GLD needs a lot more volume, folks, than to get inside its higher range. And its higher range out here, when we're talking, the higher range in the GLD is 119.68. But I do want to see more volume coming into the GLD. Bonds, the bond market out here, this is what we have with bonds. The 10-year bond up here, huge, 2 million contracts. This thing is just a rocket ship. If we take a look at the continuous contract, what we have in the continuous contract is this, TY1. Inside the continuous contract right now, we're at 127.16. And if we put this back, what you're going to see is that your swing point is 128.02. It's coming into that swing point with big volume. And what that is setting up right now, that is setting up a launch to the 130.25 level. What that is going to have is that's going to be a 10-year under 2%. That's going to put a 30-year mortgage. Right now, a 30-year mortgage are probably running at about 3.9, 3.8. That's going to put a 30-year down to about 3.7. You can expect 3.5s coming at you. It's pretty amazing. If we take a look at the 30-year bond of the Treasury, we have the 30-year bond is at 142.24. Now, this is where this gets really intriguing, and this is what it is. The 142 level is ice. So let me get the exact number here. This is cool. So check this out, folks. So we're coming right into it. You know, depending on how long you've been listening, we were looking for this counter trend bounce to come up to this level. Because in the aspect of a bull or a bear, this level here in the bond market, this is the bulls could set up, and this is the camp I'm in the bond market. The bulls would set up saying you're coming into that level and bonds want to go back to their highs. And the highs in the bond market was 153.11. The bears, and they both have a good case, the bears, we are right at ice. And what ice is, folks, is this. That would be a normal bounce in a market that will continue lower. Because you got to remember something. Bonds had topped out in 2012. We go straight down from 150 to 127. It was a vicious downdraft. Now we go back up to 142.24. And the line in the sand for the bond market, we're at it right now, and it goes from this price point. It actually started at 141.27. You're at 142.24. and it goes up to approximately the 143.13 level. You get over that 143.13 level, and bottom line, the Bulls have won the case. I suspect the Bulls have already won. Why? Because the expansion topside has been absolutely dramatic. You know, but that's how that is set up right now. You know, so we're going to basically have higher prices, lower yields. King Dollar. What do you have with King Dollar? What King Dollar is doing is this. King Dollar is setting up an ABC structure on the way down. What we did out here today, we did 29,000 contracts. That 29,000 contracts is coming into 55,000 on the way down. King Dollar right now is at 85.92, and I expect you're going to shake out down to 83.95 to 82.92. That is going to give the metal market room to breathe. Oil got absolutely smoked, folks. What we have with oil, continuous contracted oil, we're at 81.94 right now, and bottom line is that your swing point, and that's just a simple deal. Your swing point is out here. The first swing is at $75. 75 is game. What's game also is 64. Let's go to Jerry in Denver. Hey, Jerry, what's going on?
Hi, Tom. Wanted to talk to you about APT.
APT. So Alpha Protect, they manufacture, market, disposable protected apparel. The low is 149. The high is 1073.
Yeah, I got in this at about $3, and I'm kind of ridden it up, but it's pulled back today, and I sold half my position.
Okay.
And I'm wondering if you know, I should be thinking about selling my other half, or whether we're looking at something that could go up here.
I'd sell it right now. So what you have is this. You got Alpha APT, Alpha Protect, and I expect this is probably because of Ebola, right? You know, the stock goes from, what, $3.35 up to $10.73 in 4 days, right?
Right.
So you have volume, and you're in the money good, Jerry, right? This can come all the way back to $3.95 in a heartbeat. And the amount of money that was lost today, I suspect, is going to come there very quickly. And then you basically load it up again, man. You know what I mean? So your reward versus your risk is not worth it up here, man. This thing came off the high with volume. The good news is it came off the high with volume. The bad news is that it wants to come back to the breakout. But just take your money, man, and just sit there and wait. And when you have something like this, you're going to have to wait for a bit, because this is an explosion topside. Have a great one, man. Have a safe one. Coming right back, folks. You stay right there.
If the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we had the Dow Industrials finished down 5, Nasdaq up 13, S&P's up 9.5. Intel just come out with numbers. Intel closed at 32.14. It's trading out at 32.40 right now. One as high as 33.15. Numbers go like this in Intel. So the estimate was 65 cents. They made 66. Revenue, they see revenue fourth quarter, $14.7 billion. Their net income was $3.3 billion. The bottom line, as you can see, they made their numbers, but no juice in the equity. So what I expect you're going to see here is that high volume low is going to get tested before it wants to go higher. And that gap that's wide open down here is going to get filled. That gap is at $28. The high volume low, spike low from last Friday was $30.50. You broke down, they broke with volume, and the bottom line is that it's basically something that you get a broken stock with high volume, there's problems. Now, folks, let's go over to our man, Mr. Andy Hecht. Don't forget, folks, each and every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Andy has a great show right here at TFNN. Also has an outstanding newsletter. It's the Technomental Commodity Report. The way you can get that, you come to our website at TFNN, you go to newsletters, go to trading newsletters, see the Technomental Commodity Report right there. And all the programming at TFNN, folks, we do 10 hours of live programming every trading day, 8 a.m. to 6 p.m. We turn around and replay that programming at night. You can get all of it right on your cell phone at tfnn.mobi. You can also watch Tiger TV. The way you do that on your cell, just tfnn.com. On the top right-hand side, you'll see the TV. Just hit that, and you get the audio plus the video. Andy Hecht, what's going on?
Hello, Tom. How are you?
I'm doing great, man. You having a good day?
I'm doing fine. I think we should talk about oil today.
Sounds good to me.
All right. So I spent a lot of time this weekend thinking about the oil market.
Sure.
And listen, huge move today. not just the nominal price move, all over the place.
Right.
So we're down almost $4 here. But today's the first day in a very long time, I'm talking about years,
Yes.
that the oil market has gone into contango on the NYMEX contract.
Okay.
So you have November 2014 trading at 81.90 roughly.
Yep.
You have December 2017 trading at 83 and change.
Yep.
That's a huge, huge difference.
Sure.
I mean, let's remember, we were at $17 backwardation back in June. So we've come down, and it was at around $86. So the back of the curve has only gone down about $2.50.
Right.
All of the destruction is in the front. Now, I don't want to sound like a crazy man, so I'm going to preface what I'm going to say about this. But
even though we know you are.
I have a theory. I have a theory about
good.
crude.
Okay.
All right, you want to hear my theory?
Yeah. Yeah.
Okay, so we're in a coalition now with a bunch of Arab states fighting ISIS.
Sure.
We're also punishing Mr. Putin.
Right.
Mr. Putin is suffering the worst from this oil fall. There's no question about that.
Right.
ISIS has been selling black market crude that they've captured in Kurdistan and raising money that way.
Yes.
And they've been selling it at a significant discount. Well, we're awash in crude here. This crude move, while technically it looks terrible, and I agree with you, 77 is where it can go. I wrote an article for Seeking Alpha this weekend that asks the question. It says crude oil, so very bearish, but is there a price floor at 80? We need crude between 75 and 80 bucks to maintain oil independence, or a lot of our oil becomes uneconomic. It's very interesting during this drop, OPEC nations like Saudi Arabia, Kuwait, I mean, I've never seen them come out and say, the Kuwaitis said, we're comfortable with $77 crude.
Right.
The Saudis said, we're selling more. I'm wondering whether when this coalition was put together between John Kerry and the sheiks of the Middle East,
Sure.
Whether part of the deal here was to crater the oil price to hurt Mr. Putin financially and choke him a little bit more with sanctions, make those bite a little bit more, to take the some of the revenues away from ISIS, and to benefit the U.S. consumer while keeping crude oil at a level and managing it so that the U.S. producers in the Permian, in the Bakken, in the tar sands can continue to produce in order to maintain the U.S. energy independence. So what I'm saying really is that the market going into contango is beneficial for those producers who can have credit lines to sell far forward and guarantee the next couple of years' production at current levels and guarantee U.S. energy, U.S., Canadian, North American energy independence. And, when I'm watching what's happened, and I'm not talking about today only, I'm talking about since the price was, $100,
sure,
when everything started over the summer. Things feel very many times in commodity markets, Tom, after the dust all settles, it makes a lot of sense. But I'm wondering whether this is kind of an orchestrated move between the Arab coalition states and the U.S. In order to put the crude price lower for the benefit of consumers and the benefit of U.S. Oil independence.
Well, I agree with you. I wouldn't say that it's for consumers. The only reason
the consumers benefit.
Oh no, we definitely benefit. We're going to benefit. Okay, the aspect that the Saudis, they're going to destroy this oil price. And the main reason is that ISIS can take the Saudis over in 2 seconds.
That's right.
So they have a bigger issue than we even have. Okay.
They do.
Yeah,
exactly.
They do. And they do.
I think this is kind of, Dave White gave me a very interesting little tidbit here. He said that the average household consumes 1,200 gallons of gasoline a year. Every 10 cents saves $120.
it's
on
huge.
the way down.
Oh, no, it's huge.
We've fallen from $3 to under $2.20.
No, listen, it's huge. Well, see, and what happened yesterday, so last night, Andy, I was talking about this in the first hour, I start looking at the Russian market, because what happened yesterday, folks, and this was the first get-go, what happened yesterday is that, Putin took out 15,000 troops from the Ukraine border. Now, that was the first. And that's saying, hey, guess what? Granted, the winter is coming, and he probably doesn't want to get them, frozen in there. But the other side of that is that oil price is already hitting him.
That's right.
So,
but there's something else very interesting going on there. Over this past weekend, and this is another article I have on Seeking Alpha between Russia and China, Russia did a total of 50 deals with the Chinese. And the Chinese are coming in to save Putin from the sanctions, to buy natural resources and weaponry on the cheap. And they did a big currency swap, 150 billion yuan currency swap with the Russians, so that they don't have to go to dollars or euros to pay. Very interesting what's going on here. So Putin's suffering, and here come the very nice Chinese in to say, we'll help you out, but we're going to buy really low from you.
Right. Exactly.
Hey, it's fascinating. It's like a giant puzzle, but it all kind of makes sense to me.
It totally makes sense. You stay right there, folks. Stay right there, Andy. This is Andy Heck, Tom O'Brien. We appreciate you growling a problem with us out here. Dow Industrials finished down 5, NASDAQ up 13, S&P's up 9.5. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 5, Nasdaq up 13, S&P's up 10.5, and we have our man, Mr. Andy Heck. We are talking commodities. And don't forget, folks, every Tuesday, Thursday, Andy has an outstanding show right after I get off the air, 5 to 6 Eastern Standard Time. Right now, we're talking about the oil market and number one, where oil is, what type of savings we are going to have, and you folks in the Northeast and the Midwest are going to save a fortune, no doubt. Thank God, okay, because we're talking heating oil, gasoline. We're all going to save money on gasoline, but the heating oil bills, Andy, are going to be incredible as to how much money folks can actually save. I remember when I lived in Boston.
Tom, and you know, and we're looking at this crack spread. You know, on gasoline, naturally, it's way down. It's under $10. The heating oil crack spread should be about $30 this time of the year. It's under 22. So, you know, that's going to hurt refinery profits. That's certainly being reflected in the price of the oil stocks. I mean, that thing has absolutely got, as you would say, smoked all of those stocks. But it's going to certainly help consumers at under $2.50 a gallon for the heating oil.
Yeah. Well, you know, when this was, I mean, there is no doubt, you know, you're one of the first ones I heard out in the marketplace, period, you know, when Putin was getting so aggressive, saying that, hey, listen, the quickest way to basically stop them is, you know, the bottom line is that hit them in the pocketbook, hit them with oil.
Right. I said at that time we should sell SPRs, Strategic Petroleum Reserve. Yeah, but this is almost more effective.
Oh, it's even heavier, man. You know, and I can tell you what this is the classic, folks. You know, basically when, you know, the whole Ronald Reagan deal, when he just called their bluff. That's what it really comes down to. And in this particular case, what you have is that it's not so much the call on the bluff. It actually is with the hammer, and what the hammer is money. Because if you don't have money, folks, you can't start wars, or you can start them. But guess what?
There is a winner here. There is a winner, and the winner is China.
Yeah, there's no doubt. There's no doubt.
Yeah. I mean, hey, they bought the Waldorf.
Yeah, I know.
They're buying everything. It's like, you know, the world is like a giant flea market for them, where the prices were just cut.
There's no doubt. There's no doubt.
Yeah.
But if I can tell you this, if I've learned anything over the course of the last 30 years, Andy, it's that first, in my investing lifetime, first it was the Arabs that were going to take over the world, and that was in like 1972, right? And they bought all of State Street in Boston. They bought everything, right? And then guess what? We pulled the rug out from them. They all lost all those buildings. It took about another 15 years, and then the Japanese came in, and they bought everything.
Right.
And then we pulled the rug out from them. I don't know how this happens, folks, but I'm telling you something. The Chinese can come in and buy everything, and they're going to get the rug pulled out, too. And it's almost like, when I saw this come down, even a second time, I'm saying to myself, now how, and there's nothing, it's not that controlled, folks. It just happens, and I don't know how it happens, but it does.
It's just a flow. It's kind of the karma and the flow of things in the world.
I think it is. I mean, because I remember that. I specifically remember both of them so well. And when the Japanese were coming in doing it, I was looking, I'm saying to myself, you know what, is the exact same thing going to happen? And it seemed like it never could happen, folks. And sure enough, it not only happened, it happened with a vengeance. And you're talking about some of the richest people in the world in both cases.
Yeah.
And guess what? They went over their head and they wiped them out. And in the Chinese aspect of it, what very well can happen, more than likely, it's going to be the aspect that the country itself, and this is I think this is going to be one of the next big ones that we have out here. So check this out. So China, everyone that makes a fortune in China, folks, the bottom line is that you have to get the money out. Because if you don't get it out, you can see what's happening little by little. The communist regime is basically taking down their own for bribery.
Yeah.
Okay, so they're taking them out one by one. It's very small right now, but they're taking them out one by one. So the next move is that, okay, so picture you make billions and you get out. Because in order to make the billions over there, you have to bribe people. There's no two ways of it. You just have to, okay? You're not going to make the billions, okay? So you make the billions and you get out. So I started thinking about this because I saw the, here, watch this scenario, okay? So now you have these companies come over to the United States. As they come over to the United States, they buy huge amounts of real estate and whatever they buy, right? Well, did you see that the guy from Ghana, they were fighting this guy forever because he robbed everything in Ghana, and then he ended up buying, you know, a couple big buildings in San Francisco and all this. They didn't get what they wanted out of him. They only got like half of it. They got, I don't know, 84 million or something like this, okay? But we have a law in the books, folks, and what it is specifically is that if you basically plundering other countries and you bring in that money into the United States, the Justice Department can go after you, and supposedly they're going after you to turn around and give the money back to the country. But the bottom line is that when I read that, Andy, I says, oh, you know what? Another 5, 10 years down the line, maybe that's the way that they're going to pull the rug out from...
Yeah. You know, it's ultimately, though, I think ultimately it's the political philosophy over there that will be the undoing.
Oh, yeah. No, there's no doubt, man. It's slave labor.
Yeah.
Well, I mean, it's slave labor, period. The biggest problem that we have, you know, is our own soft money and our own, basically, whaler and dealers politically that will take money from them and basically push it into the senators and the congressmen and everyone else, you know, to keep their mouth shut.
Oh, have you been watching that Money at Work and in some of these crazy ads that are out there? Oh my God!
Yeah, no, that's
horrible stuff. You got Democrats accusing the Republicans of creating Ebola. You have the Republicans accusing the Democrats of everything under the sun. It's really a mess. It's kind of depressing to watch it.
I think one of the most hypocritical things I've seen, period, okay, is you got Sheldon Adelson, okay, is fighting the medical marijuana in Florida, okay? And bottom line, I remember him when he had GWV in Boston, okay? There's so many people that lost so much money. I mean, he's in the gambling business, and he's telling people that, guess what? You can't smoke pot when you're sick, okay? That pot's going to kill you. If that's not the most hypocritical thing you've ever seen in your life, folks, okay, that's insanity. I mean, it's
what's really sad to me is the thing, you know, there's a lot of things going on in the world here, and certainly the financial markets and commodity markets, we're in a hurricane now. But the most dangerous thing worldwide now, by far, is this Ebola virus.
Oh, there's no doubt. Yeah. There's no doubt.
And I am very concerned that we're just not on top of it.
Well, you know what I can't understand, and this is a tough deal, folks. There's no doubt. And it really depends. What I don't quite get my head, I'm trying to get my head wrapped around this. If you go back, folks, I used to be in the travel business. I was one of the biggest discounters in the travel business in 1980. And the way that countries worked at that particular point, you know, you always needed visas, and bottom line is that in some countries they were really hard to get. So I'm looking at this, and you know, the expansion on this is dramatic, okay? The aspect of the World Health Organization. So check this out. The World Health Organization right now, folks, is figuring that as of December 1st, that the cases of Ebola in West Africa are going to jump from 1,000, right now they're 1,000 a week. And out of 1,000 a week, there's 70% of them that are dying. That's going to jump from 1,000 to 5,000 to 10,000 a week. That's how fast this outbreak is going. So you can Google this, folks, okay? This is the World Health Organization. You want to pay attention to this. So in that aspect, I'm saying to myself, okay, people are worried about, you know, you read flights, they don't want them to break down. Well, I don't really quite understand why we should not stop visas from those countries, you know, and I'm not being, you know, but it's a common sense deal. It's like, hold it, man. You know,
it's a common sense because we can still send aid and supplies there.
Yeah, so what I'm trying to figure out is that
I don't think we're equipped at our border points, at our entry points, at JFK, at Atlanta, at LAX. I don't think we're prepared to deal with people coming off the border. And you can't even tell if they're infected and they don't have a fever. How can you tell?
Well, so that's in that aspect. I'm trying to figure out, okay, why aren't they doing that? Right? Yeah. What is the problem with doing that? What is it? You know, we're not basically saying we're not shutting the country down. We'll send you as much as you want. We should send a lot more. But I don't get why you just can't. Yeah, and there's no doubt. One of the targets says it's not PC, and I think that's the problem. And folks, if that is the problem, that's a big problem because you better face reality. And reality is that, guess what? You don't want to die. Okay, it's that simple, you know.
And we also, you know, these types of diseases, anyone who I know who's a physician, who I've talked to about this, or a researcher, you have to fight them at the hot zone. They gotta cut this. They can't go to 5,000 a week.
Totally. Hey, listen, man, we look forward to your show in 15 minutes, Andy.
Talk to you soon.
Okay, you stay right there, folks. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome, folks. Intel. So Intel, let's take a look at Intel, the world's largest computer chip maker, forecasts fourth quarter sales that may exceed analyst estimates as computers replace aging office hardware with newer, faster machines. Revenue, they're expecting revenue from the fourth quarter to be $14.7 billion, plus or minus $500 million. That compares with analyst prediction of $14.5 billion. Intel reports signals that corporate spending will continue to be a bright spot in the personal computer market through the end of this year. Bottom line is that Intel closed at $32.14. Right now it's trading at $32.60. It has fluctuated, folks, from the $32.20 area to $33.11. The high of today is $32.63. Intel had already broke down when the chip stocks had broken down last Friday. That's when they gapped lower, and it's going to be hard to get over that gap. That gap is $32.86. What you have with Intel right now is at $30.50. Looks like it wants to get hit first. And if we put this back on a 2-year
basis, that high volume spike down there, I expect will get tested. Micron Tech, you go over to Micron. We take a look at Micron. Micron closed at $27.39. This also came off the highs with vicious volume. You talk about going south quick. They went from 34 to 27 in all of 2 weeks. What that did is that brought that back in 2 weeks to May 7th. At 37.23, what you have is that Micron's going to make its way back into the 1885 area, and right now you're at 27. So some of the hits on these equities, folks, are absolutely extraordinary. They are big numbers as they have been moving into lower price. What I expect out here is that, we were just talking in the oil market. If we go over to the XLE is one of the first ones. The XLE, folks, not only took apart the February 5th benchmark, it took it apart with vicious volume. We broke the swing point. So the swing point, pull this back up, XLE. Yeah, that's a swing. It's hard to believe this is a swing because it came down here so fast. So the XLE, folks, the XLE had a high of 101. It comes down 20%, like in a heartbeat. It takes apart February 5th benchmark. The benchmark of February 5th was $81.77. Your volume there was 98 million shares. We came into that with 171 million shares. Price-wise, we absolutely have taken it apart now with 2 points lower. What that's setting up is that the XLE wants to run down to 73. More than likely, you're going to see 67. The XLE, okay, you're talking about the oil and gas infrastructure. The XLE also came back inside its 2008 levels, and what that sets up at this particular point is it sets up a 73. So we'll see how it comes down to the 73, 63 area. It's a huge heads up in the context of where the oil and gas wants to go. And when you're talking oil and gas, okay, we're talking about ExxonMobil, Chevron, Schlumberger, Oxy, ConocoPhillips, Apache, Devron, Halliburton, okay? You're talking about some of the largest companies in the world going south. Halliburton right now is at 49. It went straight down from 75. And if you've never seen oil stocks get destroyed, when you get large downdrafts, folks, they just get decimated in a big way. Halliburton at 49. Halliburton wants to run down to 39. So we'll see how it handles 39. If it doesn't handle 39, you get 32. If Halliburton is coming down with lighter volume, and so in that particular case, it can basically stop. And as our man David, I appreciate the heads up. Energy is 30% of the S&P 500. So the larger aspect here, to go back to the S&P 500 and few folks that are long and strong, get your stops in. Because what you do have is that I know the mentality is still out there, buy the dip, buy the dip, buy the dip. What you should start getting into your head is get your stop in, get your stop in, get your stop in, okay? Because the way that this has broken down with juice is I basically can make the case that you're going to 1363 and you're at 1877. That's an insane amount down, folks. But we went up, and as we were going up, it had absolutely no juice. The longer you go higher with no volume, the harder the downdraft. That's just how markets work. And in this particular case, you don't want to be sitting around. I suspect this is going to take a while to get down here. But guess what? The elevator down is a lot quicker than the elevator up. In this particular case, the elevator down thus far, we're only at the beginning of the month. It has already taken back. The S&P has taken back since April. So we're talking about April, May, June, July, August, September. Yeah, you've taken back 5 months. The month's not even over. But that's how markets go down. But you can protect yourself by just putting a stop in. And all you're saying there is you're saying, I'm not going to take, I've made money, and don't think about what you have already lost because you didn't put a stop in. What you want to do is that yesterday's gone, tomorrow's not here, what do you have right now? Whatever you have, you have. That's what a stop is all about. You say, okay, I'm not taking any more heat at this particular point, and put the stop in. Do not, I can tell you this flat out, do not
think in your own head you're going to put the stop in if it gets to a certain point, because you won't, because the pressure is tremendous, folks. Because what will happen at that particular point, you're going to say, what if it goes up? What if it does this? What if it does that? You can't make two separate decisions in the marketplace when the market is open. The reason being, let's put it this way, it's very unusual if you are a human being that can do that. And the reason is the emotional deal with money is easier to do prior to volatility inside the marketplace. You know, so it is a lot easier to say, okay, and then not only that, you can have a life. You don't have to watch this every single second, because what you're going to see, and we can already tell from the aspect of how many people are listening, that there's more listeners, because that's what happens in volatile markets, folks, okay? The bottom line, put your stops in. That gets you protected to a certain point, and if you go higher, great. You don't get stopped out. You go lower, and what does happen with a stop, if you've never used the stop, when you get stopped out, yes, you bum out. You say, oh, I got stopped out. If the market continues lower, a couple weeks after that, you'll feel like the biggest winner in the world. That's what it comes down to. Why? Because you'll realize that, oh, my God, I can't believe that it went that low. And let me tell you something. It's amazing, okay, that no matter how long I've been in the market, I can't believe how low some of these stocks can go. I can't believe I'm even telling you that it wants to go down to 1360, because that is a beating, folks. You stay right there. Mr. Andy Heck is coming up next. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one, safe one. Look forward to speaking right here tomorrow. Go get him, folks.